if not, well, at least a yellow flag to potential development investors for integrated resorts in the Philippines.
Roy?
Coincidental with this morning's presentation on integrated resorts that cover the Philippines, I don't know if some other people caught the news story on CNN earlier this morning interviewing Mr. Raison, his acknowledgement that his approximately $200 million cumulative investment in his project is not based upon finite data. Steve, of course, you lead a company that, its hallmark is doing market feasibility and analysis and all of the other critical prerequisites of what makes for a successful project. And he acknowledged in that interview that the airport is in need of serious change, and the Chinese have a resistance to visiting the Philippines per se, and he does not know if in fact there is the real demand for his product, but he's still spotting 200 million, which to me is astounding as a professional in the industry. What's the comment of our panel on that?
I agree with you. I mean, I've looked at the Philippines over the years. I haven't spent much time there over the last couple of years because I think it's a potentially, saturated market and doesn't offer tremendous opportunity for new integrated resorts, given what's coming online and given what's there, plus the challenges around the airport, the gridlock, etc. So, that's frankly why I haven't spent a lot of time there over the last couple of years.
I think our industry is a little bit unique in terms of the number of billionaires that are at the helm of most of the leading companies. And I think billionaires get to do a lot of things that the rest of us don't get to do.
Maybe taking it one step a little bit more technical, I think that the Philippines is sort of indicative of the fact that there is this perception that there is an unending Chinese market and that it will go anywhere, that there is a gaming facility without necessarily understanding what I guess I would call intervening opportunities. Locations that are closer, locations that are more interesting. I think if the Philippines succeeds, it's going to have to be buying its market. I think it's going to pay junket commissions that are much higher than average to be able to force that stretch to go on. And so in looking at gaming revenues and whether they meet their expectations or not, I think part of it is we have to look at what the EBITDA is. What does it cost me to obtain those gaming revenues to actually show up there? And I think that's a component that we're seeing in a lot of markets right now. We can get visitors because we can buy it, by paying a junket commission that goes instead of 1.6%, 1.7%, I've heard as high as 2%, in some locations right now that are somewhat less desirable. So it's that balance, and I don't know if they walked in with their eyes open on what it was going to cost them to buy that business. It's not an easy place. I think we have time for one more. If not, I'll talk for 30 seconds. It'll be 10:30 and we'll be over. Guys, thank you very much. I thought this was an absolutely great session, and I really do thank you. Thank you very much.
Thank you, Steve. I agree. A great session. We're going to take a 15-minute networking break out in the hallway, grab a cup of coffee. We'll be back with our next session at 10:45 called Slots and EGTs, Release Valve or Profit Center. I'll be moderating that with some representatives of the manufacturers and one of the operators. So it's going to be a very good session, so don't go away. And don't forget, at 11:45 following that session, we have lunch in Sicily 2501.